Over the weekend, the government rolled back export duties imposed on steel and steel-making raw materials, which it had imposed 6 months ago to bring down inflation. The centre reversed export duty on iron ore with grades lower than 58% to nil from 50% earlier, while export duty on iron ore with grades higher than 58% has been reduced to 30% from 50% earlier. Export duty on pallets has been rolled back to nil from 45% earlier, while export duty on pig iron, hot rolled or cold rolled alloy and non-alloy flat steel products of 600 mm or more in width has also been slashed to nil as against 15% earlier. The government has also reinstated import duty on coking coal, ferronickel, coke and semi-coke. Analysts feel the move is sentimentally positive and may push up stock prices in the near term.
The government has, on November 18, rolled back the export duties on steel and steel making raw materials, which it had levied on 22nd of May to preserve the higher domestic supplies and control rising prices. Now, with the rollback on export duties, we believe the price of iron ore and steel intermediaries are expected to rise, and consequently, the stock prices of mentioned company can also rise by 5 to 15%.
With the imposition of duties in May this year, domestic prices fell sharply, putting significant pressure on exports of iron ore and steel products. Indian steel exports, for instance, dropped a steep 53% to 5 million tons in the first half of FY23, as compared to 11 million tons in the same period last year. Exports of iron ore and pallets, meanwhile, stood at around 7 million tons, down sharply by 63% in H1 FY23 from 19 million tons last year. Flat steel exports dropped by around 44%, while long steel witnessed a drastic fall of 69% in the period under review. Domestic steel prices have corrected by 25% in the last 6 months, as against global price correction of 25 to 35%, on the back of weak demand in China and macro headwinds in the Western world. Analysts, however, highlight that as domestic prices continue to command a 6 to 7% premium to import parity prices, exports of steel products may remain unattractive. Given this, ICICI Securities believes the benefits of the move are likely to be marginal and perceives it as a valuation re-rating event rather than an earnings upgrade trigger. It has raised its valuation multiples by 10% each for all ferrous companies, including Tata Steel, Jindal Steel and NMDC, factoring in profitability estimates in pre-export duty scenario. On the bourses, shares of Godavari Power and Ispat, Prakash Industries, Jindal Stainless, Sarda Energy and Minerals, NMDC and Steel Authority of India gained more than 3% in the intraday trade. In comparison, the benchmark Nifty and Nifty Metal Index declined up to 1% during the day. That said, from a long-term perspective, analysts believe global steel prices could be bottoming out as most Chinese producers have started making losses. They expect demand to improve from FY24 onwards, which will help steel stocks to stay afloat. As per JM Financial, the rollback of export duty will likely aid export volumes in the long term given low base, finished steel inventory buildup, and improved competitiveness of India versus Asian countries post rollback of export duty. While we do not expect a significant impact on steel realization, pallet exports are likely to pick up post rollback of export duties. Today's stock markets will sway as per global trends amid lack of domestic triggers.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.